Hey, welcome to the best episodes of Credit 101. This is episode 29. It's literally just one more left for the best episodes of Credit 101. If you guys have the membership already, then perfect. You guys have access to over 40 different documents that I created. You guys have access to all the videos without all the ads and all the good stuff. You have all of my blogs really right there. If you guys have special links that you need to click, you can just click all the special links there. But I know this is going to help you make sure that your credit is all the way together. I'm talking 800s, y'all. That's what we need. If you guys don't have the membership, go ahead and get it. It's only $1 for the first 7 days and then $9.99 per month. Like, it's very, very cheap. Now, in this episode, we're going to talk about debt negotiation and settlement. Okay. And what's the difference? So we need to talk about what is debt negotiation and what's settlement. So let's go right on into it. If you guys have the membership, go ahead and download this quick one-page guide that I created for you guys so that you guys can learn the difference. And if you guys don't have a membership, again, look in the comments in the description and get the guide. Okay. And get all the other things that's there. We have so much stuff that's there for you all. But we need to talk about the difference. So the definition, when you talk about debt negotiation and settlement. So debt negotiation, that's when you negotiate with your creditors to reduce your interest rate, your monthly payments, or your fees. And then with debt settlement, that's when you're actually settling the debt for the full amount. And often you're paying it through a lump sum. So if you're going to negotiate with a debt, probably you're negotiating because you still have that account right then and there. Maybe you want to change the monthly payment. Maybe you want to reduce the interest. A lot of times with negotiation, you still have this account open. Debt settlement, you selling it out because it's closed. You just want to take care of it. A lot of times it's like usually with like collections, sometimes with charge-offs. That's what you think about with debt settlement. So if you have an account open, usually a lot of times I think about negotiation. Settlement is when you just trying to get rid of it. You don't want to talk about this debt no more. You don't even want to see that debt no more. Okay. Impact on your credit. So you may have like a minor impact. And that's especially if you continue to make your payments on time. So if you continue to make your payments on time, you shouldn't see any problems. If you're not paying your payments on time, or sometimes you do certain negotiations, they may report you as late. And that's going to be something that's huge. You want to make sure that they're not going to report you late. So with this, as long as you pay on time or you talk to them, you should see that your credit is starting to get better. Now, usually with the debt settlement, usually you already start making payments before the settlement, so it's not going to be anything different. Whatever happened already happened. It already hit your credit, the amount paid. So usually with debt negotiation, we talking about the full balance owed, but you may have reduced interest, fees, or monthly payments. Again, that's really the biggest thing with the amount that you're going to pay. Now, usually with debt settlements, you're trying to pay 40 to 60% on the original debt. So if you owe $1,000, you're really trying to pay $400 to $600. You're not trying to pay the full $1,000. Now, if you're doing the debt negotiation, you still owe that $1,000, but you're saying, hey, give me a lower interest rate, take some of the fees off. You're doing things like that. Now, the duration of this is going to be an ongoing debt until it's paid off or you negotiate some new terms. Now, usually with the debt settlement, it could take months or maybe years, depending on how much you save for the lump sum settlement. Maybe you just pay it all right away and that's it. It's a one, you finna call it right now, you finna pay it. It's not that much. It's $300. You finna pay it right now. It's the end. I don't want to see this no more. That's the duration. Like, that's it. It's going to just last right now during this phone call. Now, the legal consequences. Now, usually legal consequences is creditors are less likely to pursue legal action when you're already doing something with that negotiation. But I have seen, even with doing negotiation, that they may sue you, and creditors may take legal action while waiting for a settlement to be reached too. That's another thing. They may go ahead and take legal action, and I have seen that too. When it comes down to the fees, generally there's no fees unless you're working with a third party negotiator. Then they'll charge you fees. Debt settlement companies sometimes can charge 15 to 25% of the debt settlement amount as a fee. Okay, so that's the difference in both of them. Now, what's the pros? Now, the pros is with debt negotiation, when you still have this debt, a lot of time it's less damage to your credit score. It may lower your monthly payments, and it helps you avoid legal consequences because you're talking to them, y'all negotiating. They know you trying to get them some money. With debt settlement, sometimes you just pop up on them and say, hey, I want, you just pop up and say, hey, I want to just pay this. You randomly come in, you didn't even have any type of negotiation. So So with this one, it's going to this one is going to actually really reduce the total amount of your debt, because again, you're paying 40 to 60%, and you may be able to resolve it faster too, because you already say, hey, I'm going to pay 40% of it, I'm going to pay 60%. Okay, pay it. That's good. Like, you don't have to go back and forth about interest rates or fees or none of that. Hey, I'm gonna just pay 60%. We good on that? Okay, y'all good? We good. Okay, let me pay it. Now the cons, you're still responsible for the full debt when you're doing debt negotiation. We're talking about the interest and the fees may not be completely removed. Now, when it come down to the settlement, you already done damaged your credit by this time. You may continue to get collection calls if you don't settle it out all the way, and it may lead to tax implications too on a forgiven debt. So keep these things in mind. Now, when it come down to that settlement, if you go ahead and sell it out, maybe you can ask them to remove this account from your credit report. That way your credit is actually better. Now, the debt negotiation is better for people who want to avoid a default, or maybe you want to maintain a good credit health. You don't really necessarily want to mess up your credit. You want to maintain these different things. This can be great for you, and this can be good for those who are avoiding to who wants to afford making their payments, because they want to lower the interest rate. Lowering the interest rate can actually lower their payment. Maybe they want to change the payment amount they're paying every month. So debt negotiation may be best for you, especially if that account is already open. And then individual who cannot pay the full amount, or who are willing to accept credit damage, because basically it's what you're going to be doing is you're going to be accepting it, because you got to get to this part. Sometimes people are like, I'm wait till they charge it off, then I'm going to settle it. Okay, your credit going to be ruined. You got all these late payments, and then maybe they want to sell it to a collection company. Your credit is so ruined at that point. Then if you're willing to take that risk, maybe you're going to do the settlement and just settle it out all the way and ask them to remove it from your credit reports. Now, remember, it can be different for everybody. Everybody going to want to do different things, but there is a few key takeaways. Debt negotiation is for those people that have an account. So if you have an account like right now with them, if you want to basically settle out this debt negotiation may be the best for you. That's, you just want to settle it out. You just want to probably change the monthly payments. You want to be able to manage it. Just think about the people that's thinking like, oh, you know what, I want to pay my credit card, but $50 a month is just too much. Can I go down to 30? Like, you want to change it. All this interest rate is killing me. Can I get a better interest rate where I'm not going to be able to pay it? Try to see if you can do some negotiation, and also debt settlement. If you have some debts on your credit report, maybe you want to think about just settling it. I know I settled before with Portfolio Recovery, and when I settled with them, it was really a good thing because my credit score went up right away. I didn't have time to be fighting with them, honestly, and I need to know fully how that process is going to work with them. So I did it too as a tester in a way. So now I know based off of experience. Once you settle a debt with like Portfolio Recovery and some of these companies out there, they automatically delete it from your credit report. Ain't no negotiation or settlement. Once you pay whatever y'all agreed upon, they're going to delete it from your credit report. But make sure you guys get this guide so you can continue to go over it and you can figure out what's best for you. Maybe you're going to forget these different things. Maybe you need to keep it in your household for your kids, because a lot of the stuff I am putting aside of our teen, we're going to do one just for teens. Some of the stuff I am putting aside the teen membership, but I'm switching a few things up to make it where they can understand it, because it's more of a teen language. And I'm having my daughter actually help me with this too, so she can make it where the teens can actually comprehend these different topics. But hopefully this is very helpful to you guys. Make sure you guys leave me a comment. Let me know what things were I missing. What was some of your best episodes so I can create some documents for it, because I'm willing to create these documents for you guys. And also, if you don't have a membership, get it. It's $1 for the first 7 days, and then after that, just $9.99 per month. But I'll see you guys in the next video. Bye-bye. Hey, beautiful people. Welcome to episode 30 of the best episodes of Credit 101. The original Credit 101 episode was actually episode 159. So if you guys want to see the original, definitely go to episode 159. But I created a guide about how to get a mortgage after bankruptcy. So if you guys already have my membership, then you can go ahead and download that guide below. If you do not have the membership, then go ahead and get the membership. It's literally $1 for a 7-day trial, like literally. And it's, at the time of recording, $9.99 a month. So get in while y'all can, because I already know that this course is very very, very, very cheap. But I wanted to have something out there where that's going to help you all. I want to make sure that I'm giving back to our community because we just don't have it. And I'm a worksheet kind of person. Like, let me fill something out, let me circle, highlight it, tell me the steps in this type of format. This is what I need. So I created it for all you all. So let's go over what you guys need to do after you guys had a bankruptcy so you guys can get another mortgage. So after you guys have a mortgage, after you guys have a bankruptcy, you can definitely get a mortgage. But the thing is, the bankruptcy does not mean that it's the end of your home ownership. It just means that you have to do some more strategic planning. You have to build your credit up again. You have to qualify for a mortgage um, again, basically. So this guy outlines the different timelines, the tips, and the action plans that's going to help you prepare for the home ownership after bankruptcy. So if you guys had a bankruptcy, calm down, you guys. We got this, okay? We got this because I'm here for y'all, okay? I'm here for y'all for sure. And we're just gonna go over these steps. It's not over for y'all. We just got to figure out when. If not now, then when. So, step number one, you have to understand your waiting period. So, after you file for bankruptcy, most lenders require a waiting period before you can apply for a mortgage again. So, the waiting period depends on the type of bankruptcy that you filed and also the type of mortgage that you're seeking. So, if you want to get a conventional loan, after Chapter 7, you have to wait 4 years after your discharge. And then Chapter 13, then you have to just wait 2 years after the discharge date. If it's FHA loan, you have to wait 2 years for Chapter 7, and then 1 year of online. You have to have 1 year of on-time payments, plus you have to get court approval. For VA and also USDA, those are also for the Chapter 13. You have to have that 1 year of on-time payments during the time you had your plan, plus the court approval. So you just really need to wait that 1 year, have your 1 year of payments. Now for VA, you need 2 years if it's Chapter 7, and then USDA is 3 years. So that's the waiting period. Figure out what bankruptcy you filed. Maybe you did Chapter 7, and then you figure out what kind of loan you're gonna get. So you already know what FHA, you can get that in 2 years. If you want to get conventional, you gotta wait 4 years. You want USDA, that's 3 years. It's as simple as that. If you're doing Chapter 13, you can do stuff a lot faster because you're actually paying off those debts. Everything wasn't just discharged. Okay, so action step number 2, you got to start rebuilding your credit. So you got to review your credit reports to see exactly where your credit score is at. If you have anything on your credit report, I know I have this stuff here, like his report is discharged, including bankruptcy, but anything that's negative that was including bankruptcy, you probably want to get those things removed and have new items added. It's not totally necessary, but certain accounts, if you want to have good credit going forward, you have to start working to remove certain accounts. Now, if you want to just have them on there, just make sure that they say discharged or including bankruptcy and they have a zero balance. So start using your credit wisely. You need to start off with secure credit cards or like credit builder loans. I have on my website, Rickita.com, those list of credit cards you can start with that secure. Just start using your credit wisely and just start having on-time payment history. You need to build up some new accounts at this point, and you need to keep your utilization below 30%. Okay, you need to keep your utilization below 30%. Have all your credit cards on auto pay so you can pay everything on time, you guys. Pay all your bills on time. Your credit cards, your loans, your rent, your utilities, everything on time every month. Set up auto pay if you can. So you need to establish a consistent on-time payment history, because a lot of times they're going to want to see your rent history if you've been paying on time for all those different things. So you don't want to mess up on that and then he asks for it and then it's you are doing right by that. So keep all your old accounts open. If they were in good standing, keep them open, because you want to keep your accounts open if they was in good standing. You want them to continue to report, because the length is 15% of your credit score, and then monitor your credit score constantly. So keep monitoring your credit score. You can do that on Credit Karma, or you can do it also use aura.com/Rickita. They can give you your credit score also for free, or Identity IQ. I have that link down below also. But just monitor your credit score to know where your credit score is at. Now, you need to start saving for your down payment. Depending on what type of loan you want to get is also going to depend on how much you have to actually, what type of loan, how much you have to actually put down. VA loans, USDA is no money FHA 3.5%, conventional we talking 3 to 20%. So create a saving plan, create a budget to start saving for these different things. Make sure you reduce your debt and manage your budget. Budget. So you have to think about your debt to income, your DTI ratios. You want to have that below 43%. So you need to free up some of your monthly income, so that you guys can be able to get approved for the house that you want. If you have too much debt, they're gonna say, "Oh, we can approve you," but instead of you getting a $400,000 loan or a $500,000 loan, we're gonna give you $200,000 because of your debt. That's all we can give you. You're not going to be able to get the loan that you want. So start prepping for the mortgage application. You need to have these different things, your tax returns, your pay stubs, your tax return for the last 2 years, your pay stubs for the last 30 to 60 days, your base statements for the last 2 to 3 months, W-2s or 1099s for the last 2 years, your list of assets, whether you have savings, investments, or properties, and your list of debts such as credit cards and loans. You need to have all this information. Now, make sure you guys are checking your credit score. Usually for an FHA loan, they're going to want you to have a 580 credit score. For conventional, you're going to need a 320. Okay, and I always say go to a mortgage broker because they can give you multiple quotes. Basically, they can shop your credit report around in a way, that same credit report, to multiple different banks and lenders. So I love a mortgage lender. So know the different mortgage programs out there. Usually if you go with a mortgage broker, they'll be able to break some of this stuff down for you too. The FHA loan is most common for a lot of people in our community, if I can just be honest, because it's the low down payment and it's easier credit requirements. VA loans is no down payment and then no PMI for veterans. That's the mortgage insurance. USDA, no down payment in the rural or the suburban home buyers. There's no down payment at all for the USDA, and then conventional. It's lower mortgage insurance, or none if you paid it down 20%. So the timeline is this basically. So immediately after you file bankruptcy, make sure you review your credit reports, open your secured credit cards right away. I mean, right away after that bankruptcy discharge, right away, and then start saving for that down payment. And then 6 to 12 months, during that time, you need to continue making your payments on time, monitor your credit score for improvement, and focus on reducing your debt to income ratio. Years 1 through 2 after bankruptcy, this can be time where you can get your pre-approval. If you guys did chapter 13 and you're thinking about getting an FHA or VA loan, and you need to start building up your savings during this time too for larger down payment. And then 2+ years after that, you can actually apply for the mortgage. And hopefully you'll be able to get approved. And then you need to continue to manage your budget to avoid future financial setbacks. Understand that you guys need to stay patient. Building your credit can take time. Stay informed, so keep looking at your credit report. And then work with different experts too. Like, you're trying to get a mortgage loan, start talking to the mortgage broker right away and ask them, hey, what you gonna need me to do? Okay, I'll talk to you in 2 years. Let me get all these stuff. Let me make sure I have this on track. So when it's time for you to go and do it, you can actually do it. Okay. Just think ahead. If you can't do it now, then it's like, when can I do it? And then you go and apply then. But if you don't have the membership, definitely get the membership. It's a $1 trial for 7 days. If you had a membership, download this guide and keep track of everything. You know everything that you need to do now, so it's time to just do it. There's no reason why, if you want to get a mortgage after bankruptcy, why you don't get it, especially now that you know exactly what you need to do. If you have any questions and you're inside the course, go ahead and add a comment. I'll personally respond. Also send you a video if I think that you need to have a video for what you asked me. And also leave a comment on YouTube wherever you're watching it if you don't have the course. But get the course. It's just too cheap for you not to have it.